the Morning Drive on Mirror Business FM. This morning, talking finance, independent, personal finance, consultancy, that kind of thing. I nearly lost it there. I nearly went down a completely different road. James Thomas is here, and it is nice to see you.
Likewise, good to see you.
So, independent financial consultant. We were talking about Mr. Beast last week.
Were.
We'll look a little bit at pensions this week. I'm really looking forward to telling you a story.
Oh,
So you need to be sat comfortably.
I am.
Hot chocolate.
Haven't got that.
Or whatever. We'll work something out. But I've got a story for you. I just want to throw some things at you. They're all personal finance things. There's nothing in there to trip you up. It'd just be interesting to get your kind of unprepared, immediate response. That's later. We were talking, James, last week about the Mr. Beast story.
We were.
This is Jimmy Donaldson, big YouTuber. Lots of people look at this as kind of a novelty story. You know, this is an influencer buys a bank story. That's kind of what people are looking at it. But if you think this through, be reading about it this week and thinking about it, it's a very calculated move, and it solves potentially one of the probably the most expensive problem in fintech, and that's getting customers.
Yes.
Because you have an app that has customers, you have a guy who can command an audience, bring more customers, bring those two together, and you've got a very powerful business proposition there, I think, immediately. And I think that's probably the way to look at it.
Very much. I mean, again, educated myself in the last week on who Mr. Beast is.
Have you been watching Mr. Beast?
I can't say I've watched many, but I did do a bit of background and turned on a few of his videos. But you've hit the nail on the head, and maybe I'm being a bit crude in this analogy, but he seems to me to be... I'm hesitant to say this, but like Joe Rogan, but for much younger generation, in the sense that he has a massive, massive following.
Yeah.
What he says, people pay a lot of attention to, and his following are of a much younger age, it would seem. And the app, I'm trying to think the right word to call it, but the vehicle he's purchased, Step, is aiming at a very similar audience. So you're
on the face of it, it's an app. You're right, but obviously it's much more.
It's much more than that. And frustratingly, it is that the app is not available in this region at the moment.
No.
So I suspect that may well change very quickly because obviously there's a vast young audience here in the Middle East that you would think could benefit from utilizing this. But looking at it, it's from what I can see from the website, it has a huge amount of information. So that is the very positive thing. There's information on banking basics. There's debt and credit, so what they are, how they work, which can only be a good thing to help educate people. There's videos. There's very short information pieces, how to budget. And so it goes into a huge amount of detail. There's many, and actually it's set up more like almost a qualification. So you can work your way through the steps, and at the end there's actually an exam you can sit, should you so choose, actually get I'm guessing a certificate.
That's so interesting, because that just registers with me how times have changed. Because imagine in our time,
Indeed.
Remember when we used to put children up chimneys, and that they were back in those days, that you would even involve yourself in any way with the bank and
You're
want
as
to
a
do an
teenager
exam.
thinking, we could do a course and get a certificate. You'd laugh and ignore it
now.
But they will now.
Yeah. So
again, the serious side of that is actually really positive, because as where we started these conversations, many people are not financially aware, financially astute, financially educated. Unfortunately, most official education is not geared towards personal finance.
No.
It has no practical or very little practical benefit. Yes, we taught maths, we taught how to add up, we taught statistics, we taught in business studies maybe how to run a business. But what about our own finances? And it seems very powerful. The information there, from what I can glean from the website, is very slick, it's very clear. What it would appear to be showing is the app itself is a form of bank. It does have lending. It does have I mean, it's talking about instant access to $250 cash, which does have a bit of a red flag to me, because I'm sure they're not giving you that money. There will be some caveats attached to that, I am sure. I mean, it says automatically paid back at 0% APR when you receive your next paycheck. But if this is aimed at children and young adults, again, I'm only able to get a certain amount of information. So to me, it's raising other questions. Okay, but what if, like most children, who they don't have a job, or if the job they have is, I was going to say a paper round, they're probably very unlikely to have that. But
a what round?
A watch round, exactly. But if they're doing babysitting, if they're doing
Sure.
things that are more cash in hand as opposed to more informal ways of earning pocket money, chores for the parents.
I just have a picture.
Do they not do that anymore? I don't know.
Delivering newspapers now.
Oh, no, it really shows my age. But my point being is that not employed by an official company, therefore having a paycheck to receive. But
from a side hustle, as
it would be the more
parlance.
Yes.
No, but it is. I mean, that's important. But Step is obviously there's a website there. There is an app, and what Mr. Beast has done is bought that. But this deal merges. So it's a financial platform. It's a regulated financial.
It is a regulated
financial
platform. The card that can be given, or I'm assuming a virtual card, it's from Visa. So again, it's got. Credence there that Visa are involved. It's talking about 3% cash back on your spending. Again, that raises a little bit of concern, because I'm not one for encouraging people to make unnecessary purchases just to get some cash back. Buy what you want, or by all means, but not to then build up.
But I mean, that's you. That's I mean, and I get you. That's a conservative kind of approach to it. I get that, but it's a choice that people make, isn't it? So that's the other side. But this merges a platform, a regulated platform, with maybe. And I read this. I think it was Fast Company. It was it was an online publication with the most powerful distribution engine in modern media. 460 million subscribers, more than that. This Jimmy Donaldson has. So, and that's just YouTube. Forget the other platforms.
So I'm just putting my glasses on here, reading the small print. I mean, there is still, to get your Visa card, you have to have, I mean, again, it's a very American-based TransUnion, Experian, or Equifax, so they will be doing a credit check on you. So again, to be able to get a credit check, you would need to have credit history, but all of what you've said is absolutely valid. This is aimed very much at the younger demographic. It's a way to get people into an app that has some fantastic features from what I can see from the website. So very, very, I think certainly very positive. It talks about how families can monitor it. It has the security. It seems to be a very powerful tool.
Jimmy Donaldson is now positioning himself as the primary financial gateway for Gen Z and the generations that follow.
I was going to say
Gen Z as well. So
given that Z, what?
Gen Z or Gen Z.
No. But then we go back to A, or do we?
It's good. Is it alpha? I'm not sure what it's going to be. I don't think that's been decided yet.
Or do we then go numerical?
I think the next generation decide that. I'm not sure. But it changes all the time, and attitudes change as well. And one of the things with this is, I pointed out just now, it's the cost of acquiring users. The market's really crowded. Banking market is crowded. Attracting people is not easy. And it would seem to be that's been one of the issues that Step has had. They've got some fairly high-profile backers. I know Steph Curry's involved, the basketball professional.
Player,
Will Smith, the actor, rapper, is involved. So he brings his talent that he brings. You can see exactly where it's going to go, and it means that he's the other thing as well is he's registered a new trademark, which is Mr. Beast Financial. So that's potentially something that could power credit cards and loans and insurance products and things like that. And I think that's been hinted
Would this be
at.
rebranded, or would this be the platform that sits behind that? I can see it. There's a lot of synergies there.
Yeah, it's a really interesting idea, I think, and it's something that the educational aspects of that, as you pointed out, are really, really important going forward. And the fact that if you can influence a generation to want to do a banking test of their own volition in their own time,
indeed,
then that kind of changes attitudes to finance.
Hugely. But it also indicates the influence and I hesitate to use the word power, but the obviously how high regard Mr. Beast is thought of by his audience, that they would see this app and go, oh yeah, we'll get involved in a banking qualification.
Oh, in some ways, I wish I was 30, probably 40 years younger, if I'm completely honest, and I could get into the headspace of somebody that would actually be that enthusiastic about something like this, because I'm far too jaded.
Well, that's
cynical.
it. We're both sitting here with this cynicism of many years,
Unfortunately.
But I've got to say, if we had access to something like this, I think it would have been incredibly useful. Because
wouldn't be quite as poor as I am.
Well, maybe not, but I mean, I think we've both been fortunate in the sense we didn't get carried away. But as again we've discussed previously, most people's first experience of the banking world is either they have a savings account open for them for birthdays and Christmas present money, which is probably was used for treats in inverted commas, or presents that they wouldn't have, toys that they probably wouldn't have bought themselves otherwise. Or then when they got to university at Freshers Week, there'd be the rows of banks trying to sign them up for a credit card.
Yeah.
With no explanation of really how the credit card worked. Take this one, here's X thousand pounds of allowance, off you go.
That's how it was.
That's how it was. I'm sure it's not now, because but this is certainly how it was in my experience in the mid-90s when I went to university. And I've watched many people get themselves into real financial difficulties in a matter of weeks.
Do you think, bear that in mind for a second, do you think that's why, what did you study at university? I've never asked you that before.
Well, this is going to, geology.
Yeah, right, okay. So with that,
study of rocks.
That helps my argument.
Or the earth, really.
Study of the earth, okay.
Yes.
Do you think that maybe in some way seeing people, sign up for cards that maybe they didn't need, do you think that was in the back of your mind, that's not the right thing to do? Were you always fairly financially savvy?
I think I was, and I think that came from having parents who were actually very open about such things. I would sit down with my dad and he would explain money in, money out. I've been writing checks, again, that's something that's completely alien to people, but he would then check the bank statement when it came in to make sure that it matched.
And matched the stub. And,
exactly.
No, I'm with you.
And he would then talk that through with me. So I'm not sure other people had that openness with their parents. It was still a taboo subject, like we've discussed.
I didn't. I would never have done that with my father. Did you enjoy the conversation? Did you get something from it? You were interested.
Because it was probably one of those. Again, it was something. You felt like an adult.
I'm not accusing you. I'm
no,
not being.
No, it was one of those
how
things.
How boring are you for sitting with your dad talking about money?
It was.
But there's more to it.
Yeah. You were realising, I don't know, 10, 12 probably, that maybe even younger, but this is what adults do.
Treating you.
Yes, as an
adult as well. Yeah, okay.
Letting me into this world, what's a check? What's a bank? What's this statement that comes in with numbers on it? What does it actually mean? And this is the sort of, again, going back to that personal finance education, people just don't know it. And why should they until it's like any subject matter? And this is explained to you. Why would you know what it is?
But it is that thing, isn't it, of personal financial education you have to seek out for yourself.
Yes.
In lots of ways you have to make the mistakes.
Yeah. And thankfully, credit cards have been explained to me.
Yeah.
Because again, many people, because probably their parents weren't fully au fait with how they work.
Yeah, perhaps. Yeah.
And again, credit cards, I suspect, and again, sound like such old what's-its, but they weren't so widespread, but equally, they were probably the consequences of getting into debt on a credit card 30, 40 years ago would have been a lot more serious. There are now ways and means now to find a solution and a way to remove oneself from that debt. back then it wasn't the case. And
There were no consolidation loans then, were there?
That's what I meant. Yeah, exactly.
Yeah.
So, I can remember Dad saying to me, these things are great, but be very, very careful of them because the interest rates can get you into a lot of trouble.
The great thing about that is that's still the advice, because credit cards
Indeed, that hasn't
in and of
changed.
themselves they're fantastic tools. There's
Yes.
all sorts of things that, whether you get points or whether
Yeah.
you get, flight
Cashback
tickets insured
flight,
or
whatever.
cashback, whatever. They're brilliant. But it's all down to the individual understanding and taking responsibility.
Yes.
Yeah, okay. So that maybe that was your father instilling that
And also,
in you.
again, if I go back, even for my grandfather ran his own business. And so there was, I remember on occasion going to work with him and again, watching how the business was run. But again, he said to me, well, it was all about cash flow. What on earth does that mean? And he said, well, great, if money in is greater than money out, we're good. And again, it was just such a simple concept. And that's how he ran his business for 50 years, probably.
This is the thing, isn't it? That on the face of it, running your own budget, running your own business, your money, if you like, it's kind of the same thing. It's pretty simple. It's pretty straightforward. If you make more than you spend, you're in a reasonable
Was that
position.
Charles Dickens said that? No,
It might as well have been. It was, I don't know, in Pickwick Papers, perhaps.
Yes.
I don't know.
No,
But
I can't recall. But it's the same
exactly.
concept.
Yeah. So, and that's as yet unchanged. The issue always comes when the acronyms come in and the financial speakers.
Precisely. The three-letter acronyms, the more complication of it. But actually, even with this app, it's moving money from having coins and notes in your pocket, purse, wallet to an app on your phone that you simply look at. But the actual use of it is still exactly the same.
More in, less out.
Yes.
Hopefully is the way to do it. All right then. So on the face of it, a good idea.
Great idea. And I'm sure for him, it's going to be an enormous opportunity to open up a very underbanked world, because I would suggest most of the legacy traditional banks are not geared up to access that part of the community at all.
Yeah. So this is the first step, isn't it, for Mr. Beast Financial? And you can, I suppose, if you take that to its logical extension, there are all sorts of potential collabs and partnerships and other ways to work with this down the road for the legacy banks as well.
Eventually, yes. And I'm sure they'll be clambering to work with him because, as you say, with nearly 500 million followers, if he even gets 10% of that to sign up, that's going to be an enormous cohort of people.
It's a huge business immediately. Yeah. Let's move to here, James. UE residents can now access loans via the eAnd Money app. So eAnd were a digital wallet provider. Just like eAnd.
Yes.
How do we refer to them? eAnd, I suppose, not a Tislet anymore. It's eAnd, isn't it? Yeah. Okay. So we'll do that.
Just do that. I'd be guided. I still call my phone a Tisselat, but maybe I should be changing it to eAnd now.
I think it is now.
Yes, I'm sure it is.
Since the rebranding.
Yes.
So they've got something like 2 million e-money users. So working as a digital wallet, they have now secured a finance company license from the Central Bank of the UAE. Thoughts?
Again, I guess it's similar to the previous conversation in the sense it's utilising an app that most people would have initially accessed because of their telephone, stroke home phone, stroke internet connection, Wi-Fi at home. Utilising that app, people are then, I noticed, as you say, that it's now progressed into offering more and more services. And a logical next step is to become a banking app.
Well, it is the next logical step, really. And a financial company license is the license. So they're now officially a wider ranging financial institution, I suppose. So not just, payments. So you can go and pay your phone bill online, or you can make a remittance online. It's more.
It is. That's where it started from, because of course, if you've got a postpaid contract, they would have, you needed to provide certain documents to access that. And then of course, in effect, it is a form of credit, albeit very short term, because you're utilising their service for the month, and then you pay your bill at the end of the month, not before. And yes, and now it would seem they want to expand further to offer, further credit again. Wait to see what the terms and conditions are.
Well, it's a move into regulated lending, isn't it? That's the point.
So what are they going to offer as their USP compared to, most people will have a bank, but is it the smiles? Is it the other points? Is it, again, what's the attraction to make people utilise the services they're offering?
Well, all of the above, I guess, to be integrated in some way. But you know what's interesting about this? I was thinking about this. They're obviously Ian have a big consumer base and a big corporate but business base as well. But you also have, as a telecoms provider, you have, in effect, if you want to go down that route, and I guess most do, you have kind of a credit scoring system.
Indeed.
Don't you?
Already, because if you pay your bill on time, it's already inbuilt. If you're...
whether you're prepaid or postpaid.
True. Arguably, the prepaid is because you can't use it unless you've loaded the funds on there. That's exactly the point. I'm sure that they were... I would assume that it is the postpaid, probably, that they're going to offer the services to first, because they've got that connection with you already. But if you're making lots of international calls, you've got a huge data package, you're spending quite a significant amount of money with the company on a monthly basis already. So as you rightly say, you've already got a form of creditworthiness with them.
Yeah, that's kind of inbuilt, isn't it?
Just right. And the other one, of course, is if you travel and you're utilising international roaming.
Roaming minutes, yeah, absolutely right. It was interesting what Khalifa Al-Shamsi said. He's the CEO of Eand Life and also Eand International. He says that even in an economy like the UAE, it's digitally advanced, right? Access to credit is not always guaranteed. Financial inclusion levels are high, but traditional lending still leaves certain segments underserved. This is what I thought was really interesting from him. He added that Eand Money views the challenge as one of access rather than risk. Yeah. That's the point that really stood out to me. It's really
interesting that that's what they see as an opportunity, which is, I would imagine, true, because I know even now to borrow money, you've got to go to the bank, and it's still quite a manual process. Certainly for a car loan, things like that, it's still very much you've got to talk to someone. They've got to assess. You've got to produce all sorts of documentation. Well, I'm going to guess this is going to be through the app, and it can all be loaded up and done much, much more quickly.
Well, that's
and to a sector of people who, as he says in his statement there, that even now will struggle to access those, and yet they've got their phone. They're spending probably hundreds, if not thousands, of dirhams a month, but can't access traditional banking facilities.
Exactly right. And this is one of those things. I saw this story and I thought, well, it's worth a quick mention. But actually, if you drill into this story a little bit, it's worth a lot more than a mention to examine why it's Eand, I've got to get that through, why they think the way they do and how they see this as an opportunity, a challenge of access rather than risk. Because what they want to do, and this is I think this was a Gulf News article, I can't remember, or maybe Khaleej Times, they're trying to rethink, so this would all be from a press release, so freely available information, but trying to rethink how credit is evaluated and delivered, leveraging data and tech to support people who've maybe been overlooked conventionally in the past, but they have the records that show, okay, this person's, they're good for it.
They've had their phone for 5 years. They've never missed a payment. It's always been on time.
And we tend to keep our number. Yeah. We tend to stay as a customer.
I don't know about you, but I've had mine for 20-something years.
Yeah, exactly right. Right.
It's one of those things that we have on a slightly
It's a pain changing to another provider, but actually it's not the pain that you think it is. But I mean, most of us don't bother to do it because that's just where we are.
We are.
The other thing that I think is worth mentioning here, Eand money say it plans to assess creditworthiness using transaction records, alternative data sources, and advanced analytics. So it all points to the fact that this is kind of an in-house thing, and this is
and
something
again,
that will
it just shows the power of, we just click on this app and think not much of it. See what our package is for our phone, maybe turn on the data roaming when we're traveling or whatever it may be, and yet they're able to utilize that in a much, much bigger way.
Very smart, isn't it?
Yeah.
It's very smart. It's an interesting story, and it was one that I that almost kind of got away.
Yes.
But there's a lot more there than, at first glance. Plus, there's the other side of this. This is a new, line, a business line, if you like. But it's also potentially a really good thing for people who otherwise would not be able to access funds.
Very much so. I mean, again, just from other industries, I pick on car manufacturers. A lot of car manufacturers now are actually bigger banks or credit providers than they are actually car builders, because they provide the finance to buy the car.
Yeah.
And this potentially, you can see someone's gone, well, we're providing a phone service, but we can use this facility to provide so much more.
Well, a phone is for life, isn't it? Yeah, in theory. Well, yours certainly is. Mine certainly is as well, come to think of it. Yep. So that's that story. And then there was another story that I noticed this week. I haven't looked at any great detail at this. Okay. I have to be honest with you, and I'm hoping you have. It's the UAE's new end-of-service scheme. So this is the Ministry of Human Resources and Emiratization launching a consultation to boost savings. And it's all about investing employee end-of-service benefits via savings funds. So they've completed the evaluation.
Yes, so the evaluation process has now finished.
Right.
And in the high level, what seems to me is what's they're looking to do is, at the moment, your end-of-service benefit is simply a percentage of the time that you have worked.
Yeah.
So in very broad brush, 21 days for the first 5 years, 30 days thereafter. Whatever your final salary is, times those years worked, produces an amount of money.
Up to 2 years, isn't it?
Up to 2 years, I believe, yes.
Yeah.
So what it would appear that this consultation has been looking to move it more towards more of a traditional pension or savings plan, in the sense that that contribution, rather than just being a number that you don't really see until such time as you leave that employment, is actually invested for you. So they're turning it from what could be defined as a defined benefit, i.e. it's just defined, it's a benefit based upon your salary or final salary, pensions they would be called in the UK, but moving it more towards a defined contribution. That is to say, actually looking at that a monetary amount and allowing that to be invested, with the view, I'm guessing then that can then grow at a greater rate for you, so you end up with a larger pot at the end of your service.
Yeah, exactly right. So that's the idea here. And as I said, the evaluation phase is now completed. So we're looking at further enhancements down the road. But the point is that, a change is going to come, isn't it?
Yeah, I mean, just looking through, various respondents were asked about what should happen about investing their contributions. Should it be an approved savings fund? Where that should then be allowed to be invested? Was this a good, bad, or indifferent idea? Were you happy about it? Were you unsure about it? So it was gleaning lots of information from both employers who would be providing the scheme, but also from members as to what they thought about this potential change happening to their end-of-service benefits.
And it's an initiative as well. It's part of kind of broader efforts here in the UAE to make sure that we've got a labour environment that safeguards financial security for employees. It offers, we hope, some more maybe labour market stability.
Yep.
And also, the point is workers' rights being protected as well.
Yes.
So all of these things feed into
bringing all of these things together to
decision.
Improve and enhance the package that people are offered when they join a company here in the UAE.
That's a story this week. Here's a slightly different approach to our conversation today. You don't need your glasses for this.
No.
Oh, you're very welcome to put them on. By the way, nice glasses.
Thank you.
I should say. I'm going to tell you a story. All right. You sitting comfortably?
I am.
Good.
Let's go.
It's from the personal finance section of an online business magazine. It's Business Insider, which is relatively well known. Yep. And it's really about relationships, but personal finance relationships, which is a topic that we've not broached before. So let's see how this goes. Here it is. My partner and I have been together for almost 10 years now. In that time, we've gone on very different personal finance journeys. I've spent the last 6 or 7 years learning how to manage money, including handling debt, saving, investing for future goals, while my partner has mostly stayed in the same position. I don't know if that's lack of interest or fear of learning, whatever it is.
Can we go on what we're told? Yeah.
No change. Every time I try to have a serious conversation about future goals, my partner either avoids, deflects, or gets defensive. And I've concluded that my partner is a money avoider. As I get closer to my goals, it's increasingly frustrating to be with someone who doesn't want to participate in working towards my goals. Read our goals, I think, in this instance. I know that some of the goals are things that my partner would also love to do, but doesn't really want to actively engage in our finances to achieve. So it feels as though we're in a canoe going down a river, but I'm the only one paddling. And I guess that's probably familiar to some people. The question is, and I'll give you time to think about this because it's a little bit unfair to put you on the spot, but I guess this is something you've come across, I'm hoping. How can I get my partner to engage more with me and with our finances? So the situation here is it's kind of left to one half of the relationship. Whether that person's the greatest earner or not, the greater earner, it doesn't make any difference, does it?
Makes no difference, no.
It is a partnership thing, and goals in life, we all have our aim to do something.
This almost is moving into almost marriage guidance, counselling.
Well, that was my fear, and I don't want it to be that.
Because
there's no way I could guide a marriage.
No, indeed.
Nor you.
No. But it comes back to all of the things that we've discussed in the past, and it's so vital and it's fundamental of a relationship that both parties are paddling, use that analogy, paddling the canoe in the same direction. Otherwise, you either go around in circles or you don't go anywhere, or worse, you go backwards.
Well, exactly. That's what this person's feeling, I guess.
Again, it's one of those things. You've got to talk about these things. It would appear that the one partner is just burying their head in the sand, or whether it's in that sand or wherever it may be, but they're just not wanting to open up and have that discussion. That really is where things need to start from, because until both parties are talking, it's very, very difficult, because you can sense the frustration in the one who has been making the strides to educate themselves and actually to put a plan in place, because they can see that they're now. Is it them personally, or is it the two of them heading in the right direction?
Well, this is the thing.
Are you just getting frustrated because they're not joining in, but they are actually contributing financially and just saying, "Yeah, you take care of it.
Yeah,
I trust you." Or is it that they're not involved, they're not contributing financially, and they're not contributing emotionally to the discussion as well? Because they're quite different issues.
Sounds like the latter.
Yes.
But both of those sides are important because,
Very.
Simply put, if you have a life partner, wife, husband, whatever,
yep.
You're either saving for retirement together or you're not.
Yes.
It's as simple and stark as that.
It is. And again, it keeps verging into relationship counselling. But it's such,
Dr. James.
I know, and that's why I'm so hesitant. But in my humble opinion, if you're not able to talk about your finances, then there's a gaping hole in that relationship. Because what else, if, can you talk about your health matters? Can you talk about all the other important elements of your relationship? Because if you're not planning for your future together financially, how are you planning all the other elements of your relationship together? So it's fundamental to what you want to get, where you want to get to.
Well, that's why I brought it up. I mean, there are all the usual things. Should I buy this 401k? This is obviously an American website. What should I do for my retirement here? What about this kind of insurance?
Or whether it's a 401k, whether it's a stakeholder pension, whether it's whatever it may be, it's planning for your future.
Well, there were all sorts of stories like that, but I kind of brushed those to one side because this one gets to the heart of how important these decisions are once again, and that's what I kind of thought was important. Plus, I wasn't sure what this person was complaining about. Was the partner just, had they even discussed, no, I'm not getting involved with money, I don't want to, you do that.
Yeah.
I don't think that's the case. I think it's just, I wish you would get involved a bit more.
Indeed.
And actually you need to, because this could impact you. Plus, it's something that you need to take responsibility for. And I think that in a relationship, that makes it very difficult. It's not the relationship I'm so worried about, it's the fact that it should be, I'm not worried about it, that's taking it a bit far, but I was concerned by the fact that you have to take these things seriously, and they do have to be talked about, as you say.
They do, and it just would worry me if I was sitting down with a couple and one of them was not paying any attention, would not open up to me, would not tell me about their situation. Well, I can't really advise you. And
you would wonder if they were serious, wouldn't you?
You would wonder if they're serious, because if you're not going to open up to me and tell me, answer my questions, then what are your plans? Where do you want to be in 5, 10, 15, 20 years' time? All of these large questions, and I say, I'm not expecting someone to say, well, I want to live here and I want this and I want, but it's to be aware that, as we've discussed, time marches on incredibly fast. And if one of the couple has already started to make some serious positive steps to improve their financial situation, and their partner is not, then that does raise some large alarm bells that are only going to start ringing louder as they move closer to that retirement goal.
I mean, there's a contradictory dilemma in this, in that you've got partners in different places in their financial journeys, in a canoe, but only one's paddling, which it's quite a good analogy in a way. The question is, are you going down the river in the same boat? Are you in two separate canoes?
Indeed.
Or are you failing to keep up? And that, I think, so from a relationship point of view,
absolutely, because if you're on a nice flowing river, then one of you paddling probably get you down the river fine. But if you're paddling in a different direction, in a different canoe, as you say, then it comes back almost to the relationship. And it's how frustrated you're getting with that situation.
Yeah. So if we take the relationship thing to the next level, what's best, separate finances or to share everything?
I would always say to share.
I don't like this.
No, I do like it. This is great.
But these are really important questions, aren't they? Yeah.
Because, again, if you're not sharing, then how on earth are you going to plan your future together? Now, I know some people, I'll pay for this, he pays for that, she pays for the other, whatever it might be. But again, I would suggest then a conversation has been had as to how things are divided up, much like if you have children. One of you may do the morning routine, someone else does the evening, or you share it, whatever it might be. There's a plan that's put in place. You take them to school, you pick them up, whatever it might be. But a plan, a strategy, a discussion has happened about how we're going to run out, even if there's no children. But what are you going to do? Who's doing the shopping? Who's cooking? Whatever it might be. I know it sounds very basic, but you're in a relationship. There's a couple. There's a conversation.
Exactly. The conversation has been had.
Yes.
That's the point.
And a plan has been put in place that both parties are happy with.
Okay.
In our household, I cook, Colette cleans up. It works perfectly. But most of the time, I think. But my point being is there's been a discussion.
She's headbutting the radio at the moment. It doesn't.
I can't stand the food he's cooked. I wish he wouldn't. But
Oh, well. To be you tonight when you get home.
But my point being, discussions happen. There's a conversation. There's a thought process. There's something has happened. And I'm sure you and Veronica are the same. You would discuss these things.
I would be told.
Or you're told, whichever. But then you follow.
Yeah, sure.
But if there's no discussion about your finances, or you're getting frustrated because your partner is not opening up to you and is not willing to engage in a conversation about something so fundamental to your future, it's a huge red flag.
I didn't mean to turn you into a marriage counsellor today. I really didn't. But
this is where it can cross over into those areas, you're trying to be very matter of fact about one's finances, but you can see from this, which has been a great discussion point, it covers all aspects of your relationship. And if you're not discussing that, then what else is not being discussed? And how do you make that plan? Because are we doing this together or not? And even if one says, look, I'm leaving it to you. Well, fine. If that's how you want to manage, there's no right or wrong answer, but there just has to be a discussion about it, a conversation.
And if you take the canoe analogy even further, if you and your partner are in separate canoes, you need to be aware of things like one's going to paddle faster than the other. One is an experienced rower. And even the best canoeists, is that what kayakers, canoeists? I guess a canoeist is a thing. Even the best need a bit of support every now and again.
Always.
So,
yes.
There's a trade-off here. So being in the same boat. Canoe, might be a good way to do it. So. I just thought it was an interesting article.
It's a very interesting article, and I'd be intrigued to find out how that they've resolved the situation.
I haven't got an answer back from the couple, and I will check back, because you never know, they may come back and comment. But it's not difficult if you start small, I suppose. If you look at the context of like a shared future, an exciting future.
As you can tell, we can get excited about it. What are we going to do? Where's this leading to? Yeah,
it doesn't need to be, it's going to be a big house by the river, by the tree by the brook, or
and likewise
whatever.
With the money, if you're still uncomfortable, although that's, again, another issue, but just start small. Yeah. And then
with like a holiday or something, a shared holiday, and then go from there to what do we save for this, and what do we? Yeah, okay. No, I'm with you. No, it's just interesting, and I felt as though one side was pretty frustrated, and
that's how it comes across in the story.
Not sure at all. So your advice would be, obviously, sit down and be transparent and talk it through, and try to be a little bit more goal oriented. Start opening
the doors and get some goals. But even if those goals are to talk and discuss one's finances, because if you're not opening up, then as you can tell that partner who has been making provision is going to get increasingly frustrated.
It's a good point, I think. It's been an interesting discussion today, hasn't it? Slightly less structured than normal maybe, but plenty to talk about. James Thomas is an independent financial consultant, joins us every Thursday at this time, and I'll see you next week.
Will do, thank you.
Appreciate you coming in, James. Thank you. Just a reminder, some podcasts that we are now producing here at Mirror Business FM. Crossroads is a collaboration between Middlesex University Dubai and Mirror Business FM. That's every Friday. So tomorrow will be episode 5, I think. Dr. David Tully, Dima Magalse will welcome a new guest in here, 1 to 2. That will then be podcast, so you can find it across whichever platform that you use. That's Crossroads. It's all about the entertainment, the global entertainment industry, but the perspective is really here in the UAE. And then Luxury Breaks as well is an automotive podcast with ex-Motors Jacek Ziemek, who is a man that says it as he sees it. That's a new podcast from Mirror Business FM as well. And once again, that's Fridays, and then across podcast platforms. Listen out, watch out for that.